All right, we're good to go.
Yep.
Okay. All right, everyone. Welcome to our May DeFi Toronto meetup. We've been, for those of you who've been kind of steadily following along and who've joined from the early days, we've been running for I think over 3.5 years now. So thanks for your support. Here's a quick highlight of the team. I'll start from the other side. The newest joiner is Johnson. Johnson, do you want to do a quick one-liner? And maybe we can hand it around to everyone.
Sure. Hi, everyone. My name is Johnson Jones Matthew. I work in marketing at a crypto firm called Virgo CX. And my prior experience is also in crypto firms, Secure Digital Markets and Coinberry, where I used to work in product. My venture into crypto started into midway through 2021. So this is my first bear market, but I've been having a great time here at being led by the gurus, if I should say, at DeFi Toronto. These guys have been here far longer than I have, and it's been a great time and a great community. So yeah, that's my story.
Thanks, Johnson. We're grateful to have you on the team. Sophia?
Hey all, I'm Sophia. I work at ChainSafe in marketing and as their global events lead. So if you don't know about ChainSafe, ChainSafe's a research and development firm based in blockchain, specializing in infrastructure development and Web3 gaming. We pretty much contribute to different protocol level blockchains such as like Ethereum, Polkadot, Filecoin. We also do bridging, decentralized storage, and we're global in about 33 plus different countries. So if you want to know what's going on with the latest updates with events, you can hit me up on Twitter or on LinkedIn or through chat here. And I'll pass back to you, Liam.
Thanks, Mark.
Hello, thanks, Lim. I'm Mark. I'm a VP at ICTC. We are a nonprofit center of expertise for the digital economy. And we are out there helping Canadians succeed in the digital economy, which includes obviously digital payments, currency, and Web3. And I've passed in education, working currently with education stakeholders, leaders, and industry to upskill and reskilling Canadian. And happy to be here again today.
Thank you. Victor?
I welcome everyone. I'm currently speaking to you from Hong Kong. I'm just visiting my parents here. So I've been in the crypto space since 2014. And it's great to have a group of like-minded people to run this DeFi Toronto meetup since 2019. Myself, I work for a crypto hedge fund called Brion Capital. So I do fundamental research to support our investment decision. And I also teach a course at York University. So welcome everyone. Pass back to Alum.
Thank you. And I'm just dropping some links in the chat. So I'm Alum Kamisa. I lead product at Delve, formerly Element Finance. So we are a research and development shop that's focused on building DeFi infrastructure and products, including governance systems. So I've just included a couple of links in the chat for some of the things that we're building. Council is a full stack decentralized governance system out of the box. Hyperdrive is a new AMM that we're building, and we've actually partnered with MakerDAO. We're going to be launching a fixed rate borrow product in the coming months with them. Yeah, I've been in the space since 2017. I've also taught at George Brown College alongside Mark Lejour for the past 4 years, although we've kind of taken a step back from that to focus on some other things now. And I wanted to just give a quick intro for Imran. He's not here today, but he is working on a new project called Langwaller, which is I'm going to drop the link. I'm pretty sure this is it. Forgive me if it's not. But it's at the intersection of AI and crypto, and it's really a chatbot that can be dropped into any messaging platform to be able to execute crypto transactions and get information. It's pretty cool. It's very early stage, but yeah, you'll hear more about that from him at the next meetup. Okay, enough about us. If you want to chime in and kind of provide us with some feedback, if you want to provide us with some ideas around speakers and themes that we can focus on, feel free to hit us up, either DM us on Twitter or send us an email at the email address here. And we'd be happy to kind of engage and pick your brain on things. Awesome, thank you. Next slide. Okay, so the agenda for today, we are gonna have an amazing DeFi news recap, as we usually do for every meetup. Victor and Mark are gonna be running that. After that, we're gonna have Brion from DeFi Current, who's gonna be giving us a talk on deep usability. Following that, we'll have a talk by Rohan Agarwal from Cypherock on a new approach towards solving private key recovery. We'll have a quick 5-minute break where we'll allow community members to kind of just make comments, tell us what you're working on, tell us if you're looking for a co-founder, a new project, if you're looking for fundraising. We'll see how we can help you or how you can engage the community here. We'd love to do that. And then if we have time at the end, we'll do some Q&A, but I don't think we're gonna run the full 2 hours today. We've got just 2 speakers. So without further ado, I will hand it off to Victor and Mark.
And we'll go to Maya first. You can, yeah, here you go. Maya.
Oh, yes, sorry, my apologies.
That's all good.
Yeah, we got Mayor here from the Futurist and from East Toronto, so thanks, Mayor. Off to you.
It's all good. It's all good. Thank you so much for having me here, guys. You guys always been extremely supportive of Blockchain Futurist Conference. My name is Meyer. I have been in the space since 2012. We've been community building for the last 10 years, and we've been lucky enough to grow with the Ethereum ecosystem and lucky enough to be part of some of the earliest onset projects and advisory. To these days, we've really focused on still building the community. And we run Canada's largest blockchain conference. So if anybody has not been there in the past, Blockchain Futures Conference is coming up again this year, August 15th to 16th. Last year, we were talking about it. Alum had mentioned we had over 6,500 attendees. This year, we're trending for something similar, and we're very excited. As part of that, if you want to go to the next slide, Mark. Yeah, so it's a really cool atmosphere. It's at Rebel in Cabana again this year. I think this is the last year we'll be hosting it at this venue as we're getting bigger and bigger and bringing on partners for the next year. We have over 100 speakers. This year we have Charles Hoskinson, Michelle Romanov of Dragon's Den, Ethan Buckman of Cosmos, and some really, really great speakers. A lot of top 100 companies and coins, Ripple. We got some really great speakers coming out this year. We have over 85 press of media and just some really exciting stuff. NFT galleries, more art and culture for Victor, and as well as some fun surprises as always. If you want to go to the next slide. The great thing about it is we're running the 2nd annual ETH Toronto Hackathon. This was a huge success last year. This year we have over 1,000 developers coming out. We've already accepted over 800. We have 2,600 applications. So it adds a really great balance to the conference itself. So we have builders and the business side of it all together. The hackathon itself this year, it's free to apply. So if you're a developer, please make sure you go to ethtoronto.ca and apply to be part of the festivities. And the next slide. And for the inaugural year, our mandate has always been to bring more females into the Web3 space. So we are running ETH Women as an inaugural hackathon, a female-focused hackathon, and it's getting a lot of great traction, and it's one of our big mandates to grow this year. So if you're a female in the space and you're on this call, make sure you go to ethwomen.com and apply and attend the conference and meet other like-minded females that are really changing the Web3 space. If you want to go to the last slide. And just for being here today and until midnight tonight, we have a $50 ticket for anybody who wants to attend. It doesn't get any cheaper than that for any 2-day conference in the world. There's so make sure you go on to futuristconference.com and use DeFiTO. DeFiTO as a promo code for a $50 ticket only until midnight tonight. We hope to see everybody there. If you do want to connect, you can always email me or just go to the futuristconference.com and email the events website. Also, I'd like to announce that one of the greatest moderators of history will be coming back to Futures this year. He had already spoken, Johnson on the DeFi team. He's one of the best moderators I've ever heard, and I can't wait to have him back at Futures this year again. So thank you so much. If you guys have any questions, please ask here or put in the comment section. I don't want to take too much of your time today.
Yeah. We can almost guarantee
Meyer.
the parking is going to be more expensive than the conference at this price. So, Meyer, thanks.
Yeah, you know what, we like, for us, this is a community event. Like I said, any dollar we make on this event, we put back into the event. It's not a for-profit venture. So if you guys want to support, we want everybody in Canada out here. It's really important to keep this community going. And it's actually even more important than ever with all the regulations that we've seen come into the market. So hope you see everybody out. $50. Hope you guys can scrape it together. And if you can't, there's other ways. You can always volunteer and be part of the conference as well. So just reach out to our team and we'll make sure you're there. We don't leave anybody out.
Yeah. Thank you for your excellent service to the community there. Stunning conferences and lots of OGs. It's the time to see you all the old timers and your friends from last year. They're all at the conference for sure. Looking forward to it.
Yeah, I really like the logo, the Ether Toronto, the logo that you combine the Ether with the Toronto, the CN Tower. Just really looked really nice.
Yeah, no, you gotta thank Tracy for that. She's the creative mind behind all that stuff. So she really loves the Toronto community and wants to make sure we continue to grow this community as much as we can.
Yeah, for women's logo, it's a little bit, maybe it could be done a little bit better on the logo for the woman.
I'll let them know. It's
holding back for Victor, right? Like some praise.
It's a lot harder to make a logo for an entire species.
Well, with AI like Mid Journey, I think we will delegate to the AI to design for us.
True. We developed it before Mid Journey, but I hear you. Next time for sure.
Awesome. Yeah. Thanks so much, Mary. Really appreciate it, man. Always great to have an event happening in Toronto and supporting the local community. Awesome. Let's I think we're at about 20 minutes past the hour, so we're gonna shift gears into the first section of the meetup. We'll do the DeFi news recap. Victor and Mark, take it away.
Okay, thanks, Alum. So as usual, we usually highlight some event, and Mark and I will talk about the ecosystem, and I'm a little bit more heavy on data and charts because my work at Brion Capital, we look at a lot of the data and charts. So I'll show you on that. I will start first. So the big news last month was the Ethereum Chapella upgrades. Basically, you can withdraw staked Ether and their reward from the smart contract and move around. And before that happened, there's a lot of speculation whether people will just take the money out and dump and drive down Ether price. Well, so far the news is that the total number of Ether locked in the staking contract dropped slightly, and now it has already surpassed the pre-upgrade level. So you can see the chart here. So here's the date, April 13, when the upgrade happened. And at the start, you see there's a lot of a withdrawal of the reward. The yellow one is the reward, staking reward withdrawal. And then you follow by some withdrawal of the principal. Basically, principal is the 32 Ether you need to run the validator. So those are the principal, the blue line. But you can see that there's a huge influx of new deposit, which the light blue on the top, above the zero line. So this purple line is the total number of Ether including the reward that has been locked in. And you can see now we are well surpassed the point when we around 19.2 million Ether locked. Now is about over 21 million Ether have been locked. So it's really significant in the sense that it shows that the validator, the community, has a lot of faith in the proof of stake, this process. It have a faith in the Ethereum ecosystem, and also means that they find the yield quite attractive given the risk. So one of the big impact of this upgrade is that it removes the liquidity risk. So if you're a solo staker, now you can withdraw anytime you want. So that remove that uncertainty. So many institutional investors, if they do staking, they want to know that they can take the Ether out if they want to. So that's I will consider a de-risk, a reduced risk. So when you reduce something risk, the demand should increase if all things equal. Now here's yesterday I just checked online. Here's the number of validators waiting to join the staking. It's over 70,000 validators. Remember, each validator have to put in 32 Ether. But each day the smart contract only allow you accept new validator to a certain amount. Roughly is about 18,000 new validator per day. So if you divide that number by 72,000 divided by the 18, roughly give you 40 days. So it means that if you want to join to become a staker, you have to wait for 40 days for the queue. Meanwhile, there's hardly any validator waiting to exit. So if you want to exit, you can exit right away. So it's very, very flexible if you don't want to stay there. So, but it shows that the community has a lot of confidence, a lot of faith in the ecosystem. Next, so this is the current status. So since the Shambhala upgrade, sometimes we call them Shanghai upgrade, there's almost 3 million new ETH was deposited. 3 million. But if you count including the withdrawal of the reward, then it's about 2 million new net inflow into the smart contract. So right now total is about 21 million. Since the upgrade, the total number of ETH stake is increased about 10%. And that also represents about 17.7% of the total Ether supply is locked in. So, okay, so what that means, why we care about this statistic? Well, few things. One is that by have more Ether stake, it means the network become more secure, because if you want to launch a 51% attack, you have to go to the open market to buy at least 21 million Ether in order to be over 51%. So it makes the network more secure, assume other things equal. Number two is that the staking yield will be slightly lower, because as you more Ether stake in the smart contract, then the yield will go down a little bit lower. I will show you in the next slide. But more important is the token liquidity. As more ETH locked in the smart contract, that means there's less ETH are trading on exchange. So that means that it will reduce the liquidity on the open market slightly. So this is the staking yield chart. So here is roughly around here is just before the Shambhala upgrade, and you can see it dropped down slightly. It's not much. It's only like 4.2 to 4.1 a staking yield. this staking yield, this 4.1, 4.2 is excluding the transaction tips. And here's the actual theoretical staking yield curve. As you increase the amount of ETH stake, you reduce the staking yield. But we are right now at a 21 million ETH, so it's way up here already. So the slope is very, very shallow. So it means that even you increase a lot of stake ETH, the decline in the yield is very small and graduate. So I would expect, going forward, we'll probably stay around 4% level unless there's dramatically increased number of ETH deposit into the smart contract. However, there's another component that if you stake as a staker, you receive is the transaction tips. So if there's more economic activity happen on the Ethereum blockchain, you will receive more tips. As recently, the tips was very, very high. You combine a few days, like last week, if you combine the staking yield plus the tips, you are about 8%. 8% reward yield as a validator. That's really, really amazing. Okay, now let's switch to the other news about related to Bitcoin. So, Bitcoin is, almost single purpose blockchain, and most people will treat it as a digital gold. But they do have some innovation this year. Early in January, they introduced a new protocol called Ordinal protocol. And in March, they introduced this BRC, Bitcoin Request for Comment, BRC20 token protocol. It's kind of similar to ERC20, but it doesn't have the same smart contract capability as Ethereum's ERC. But they introduced is almost like a NFT token standard, even though it has not been officially approved by the community. So they still consider a beta version. But what that allow the protocol, the Ordinal protocol and the BRC20 allow you launch NFT type like a token on Ethereum. And so far, this is the chart. This chart is showing the number of the inscription. Basically, you can write data, embedded data into Satoshi in every Satoshi if you choose to. So there's a last month and this month there's huge increase in number of almost like a new NFT create, but it has come down quite a bit. So we'll see whether this boom will last or not. One thing you'll notice that even though you can embed any data into one Satoshi, so far 90% of the so-called NFT is actually text-based. You see the light blue is text. Image, which is the dark one, is the black one. It's very, very few. So it's very different than the NFT on Ethereum on other blockchain, where most of the NFT is the image, where here in Bitcoin is mainly text. So far, the trading volume is quite good given that short history. Yesterday, I looked at 24-hour trading volume. It's almost $2 million worth of Bitcoin NFT trade. Still very small compared to Ethereum, but it's already surpassed, Solana. Here, I want to introduce this new concept, financial statement concept of public blockchain, which was pioneered by Token Terminal, which is a way to measure whether a public blockchain is financially sustainable or not. You can think about a public blockchain almost like a company. You have revenue and you have expenses. And in case of public blockchain, the revenue is usually the fee paid by the paid by the user for transaction. And expense is usually the cost you pay to either the miner or the validator to secure your network. So if you take these two into account, net them out, you can say, okay, does the blockchain itself have net earning or net loss? So that's a way to look at the financial sustainability of a public blockchain. So I find it's quite useful. Basically, you bring the traditional finance concept into measure the financial well-being of a public network. So let's take an example of what Bitcoin and Ethereum look like using this framework. Here is Ethereum. Let's look at Ethereum. Remember last year, September, the merge that basically completely transitioned Ethereum from proof of work to proof of stake. So we'll just take the 1 month before and 1 month after the merge to see what's the impact to the financial well-being of Ethereum. The fee, roughly 90 million for the August, and October, 1 month after, is almost 100 million transaction fee paid by the user. And same time, you have to pay for the validator, and it's roughly 21 million that you have to pay for the. Remember that small amount tips has to pay to the validator, but before the proof of work, you actually have to pay all the transaction fee to the miner. So that's why there's a decrease in terms of the fee that pay to the miner and validator. The big change is the token inflation, the one basically the block reward. You can see that the block reward has dropped from almost 800 million in August to less than 100 million in October. That's huge change. It makes the network from net loss to slightly positive. So this is very, very significant. It's a huge change to the financial sustainability. So basically saying that Ethereum do not have to tax, do not have to maintain the security of the network at the expense of the token holder. You do not have to keep inflating issue new token, net issue of new token to provide a security. So you can see currently we have in May, basically this month, we already have surplus positive earning almost $250 million dollar. In comparison, Bitcoin, remember Bitcoin, all the transaction fee is paid to the miner. There's no accrued benefit to the Bitcoin holder. And same time, you also issue the block reward, which is quite expensive. In case of May, there's a 600 million worth of a new Bitcoin has been issued. So net, the network has a loss of $600 million of financial net earn. So that's the difference in between Ether and Bitcoin. And so finally, just quickly touch on Bitcoin and blockchain and AI. Lately, there's a lot of news about ChatGPT and other AI. The question is that how does AI affecting interact with blockchain? Do they work together well? So I did a little bit of research reading of different articles, including some publication from Chainlink and others. Generally, the view is that AI and blockchain work well together. The reason is that blockchain provide massive amount of data online, public data, that is immutable, that is secure. So you can use that for AI to either fetch the data or to train the data. So that's a good thing. For example, Solana already launched a ChatGPT plugin so that you can use that plugin to query, Solana's on-chain data. And there's some use of AI to help you write code, especially if you're new to programming about blockchain development. They can help you write code, and some even try to use it to audit the code to see if there's a vulnerability or not. So overall, it's pretty positive, but of course we're in early stage. So this conclusion may be a little bit preliminary, but it's worth keep our eyes out there. And finally, just before I pass on to Mark, this is actually a case study to see whether actually AI can use to audit the smart contract. So one of the decentralized betting platform called Z Casino, and they have this smart contract code. They hire a professional security auditing firm called Cypherock to audit. And at the same time, they use a ChatGPT to audit their code and then compare the difference. And the general conclusion is that it's helpful, but it's not complete. And especially in the more difficult area, for example, looking at the design-related vulnerability, ChatGPT is still not quite there yet. And also, they tend to give some high false positive rate. Basically, they will say, "Oh, something not quite work well, right?" But in practice, it's okay. The auditing firm look into the issue raised by the ChatGPT. They look into it, it's not an issue. So there's definitely not quite there yet, but interesting to keep eyes on it. Okay, I'm going to pass on to Mark to continue the second part of the news recap.
Thank you, Victor. Very insightful. So for my part, I wanted to focus this month a little bit on cybersecurity because it's a major topic that it's been some time we didn't spend some time on. There was an interesting conference in Ottawa a couple of weeks ago, organized by INSECM, and there was a very interesting couple of talks. Actually, the beginning and the end really set the tone. At the start of the conference, the Minister of Cybersecurity and Digital Identity, Eric Kerr from Quebec, really said, look, this is a conference about cybersecurity and identity. Just forget about identity. You guys focus on cybersecurity because that's the major priority right now. And it really insisted then again on the threats for Canada. So you all heard about the war in Ukraine. You all heard about potentially increase in state actor activities. And there is an interesting report done by the Canadian Centre for Cybersecurity, which is part of the Canadian Securities Establishment. That's why actually part of the reason why we're having the conversation today. It's because it actually called DeFi as one of the major threats or vector for threats. So I took a screenshot on the right of the executive summary, and you can see what the key judgments are for this year, which some of the threats you're already aware of, you heard of it, because they're on the news pretty much on a daily basis. The ransomware, the critical infrastructure, that's obviously the energy sector, but also healthcare, education, transportation, anything that can disrupt the economy or the standard of life for the country, it's part of the critical infrastructure. State-sponsored actors and misinformation, disinformation, and that also touches to AI, and ChatGPT, Midjourney, and other AI tools that can mimic now audio, video, and make some very compelling audio and video and pictures that look like real, but are not real. And that obviously this technology is used for malicious intent. And under the last one, digital assets, and as part of the emerging technologies that are actually sought as a threat. So if you pull that report out of the internet, you're going to see that the key topics, the key references they cite in their report is actually the chain analysis report. It's pretty much the entire source of information that they cite. So I went away and I pulled the report, the most recent report, which is actually newer than the one they used in the cyber threat assessment. So if you go to the next slide, Victor, I put a couple of the key takeaway from the new chain analysis report. So this is new data that came up in February. So that's the next slide. And obviously, if you just look back at 2022, what a year. We had Tornado Cash, we had a lot of chat about OFAC, 3SE, Voyager, FTX, of course. It's been all over the place. And then of course, Choke Point 2.0 and all those things happen. But if we look at what the on-chain analysis is telling us, and that's what chain analysis is looking at. They're looking at the data that's on-chain. You're going to see that 2022 was a record year for crypto hacking. And we reported on this group before that DeFi was really a target among all the cryptocurrencies use case. DeFi is the most hacked kind of use case. So very much of interest to our community. So DeFi protocol is again called by chain analysis. Of course, state actors like North Korea. And the graph I put below talks about the total value stolen in crypto hacks, and you can see there's an increase in value, although the total number of hacks seems to go down a little bit. But look, this is minimal. Like there's a huge increase in the last couple years. So if we look at the next slide, some other interesting peeks at the data. This one looks like at kind of a breakdown for illicit users. So if you look at, there seems to be like a little bit of a change in 2022. Of course, OFAC and the sanction address takes a big part of it after Tornado Cash. A lot of our people from our community complain that they've been dusted. They actually sued the regulators of the government, or they complained. So no surprise that the sanction part in 2022 is a big one. And you're going to find, of course, for some reason, the beginning of scams. I'm not sure anyone is really surprised. But if you look at the amount of stolen funds, it actually grew a little bit, and it keeps going over the years. So that's probably one of the areas of concerns. Obviously, we don't want our money to be stolen. Next slide. Okay, so now we're going to look a little bit on the other side of the money. So, I mean, in terms of silver lining and what's, lessons learned and what's working actually better in DeFi. And interesting trend, maybe we'll start with that, is that ransomware revenue is going down. So the hackers are getting paid less. I think that's probably a good news, because there is obviously a monetary incentive behind ransomware. And that's because people refuse to pay. So maybe it indicates that people are getting a little bit more prepared and maybe more resilient to this type of attacks and can respond better. So that sounds like a very good news. Going to the next slide. In terms of silver lining, it's always important to put the numbers in lights, right? Because when people, tell us, well, there is a lot of illicit activities and Bitcoin is all used by drug dealers and narco traffickers, well, it's always good to put it in the perspective of the rest of the cash. It's actually crypto overall, and including DeFi. It's actually there is less criminal activity by an order of magnitude than with regular cash. So there are gross simplifications out there, or if you want to look at it as well, there's there's a good perspective on crypto. It seems to be a little bit more virtuous actually than the typical cash. The other thing is that there is a lot to learn from DeFi, and I mean, let's stay on that slide for a little while for the second part of the, the fact that you have actually a lot of data on chain is a good thing. Keeps everybody transparent. It keeps a record of the data that everybody can monitor, look at. The code is open source, the data is there. So during FTX, a lot of conversations actually we had was about proof of reserve, and how do you prove anything? You prove anything because you have the data and people can verify, trust but verify. So with DeFi, you can verify because the data is on chain. So there is a lot that the regular traditional financial system, the way it operates, can learn from DeFi. So that is very promising. So moving on to the next slide now, this time. I mean, we cannot forget to mention the Ledger affair, which is another source of philosophical reflection for our community, because I mean, the fact is that Ledger, which is one of the most popular hardware wallets with kind of top of the game technology with a chip that can secure a private key. So far, so good. However, a couple of weeks ago, the community learned that Ledger wants to come up with a new service, and we heard that they can split the keys, and suddenly we heard that law enforcement and if law enforcement can access the private keys, so potentially can do an attacker or potentially an authorized person. So very concerning to the community that the sharded keys could be accessed by other than the true owner of the coins, right? So as we say here, not your keys, not your coin, but if Ledger actually leaks in some fashion the private key or part of or the whole private key, then there's definitely a very, very big concern. On another hand, there is still a tension that we have to resolve there in our community as to, if we want more people to be able to use crypto and using them safely and not losing their crypto, well, they need to be at some point more support, like a recovery services. So this idea of splitting the key and having a recovery mechanism with some kind of multi-sig approach or a trusted ring of peers. This approach has been discussed for many years. So it looks like our community is not ready to, or maybe the Ledger is not the right solution, but we'll have to, and that's a personal take on it, but we'll have to resolve eventually where is the right balance between ease of use and privacy. So looks like we're not anywhere close to solve that question. And to conclude on that one with a later slide and call everyone to more education, because this group is really about educating ourselves and sharing and bringing speakers and that have done a little bit ahead of us. It is to call for also the need of education of the broader public. So like the youth in particular, and everyone learns a little bit about the risks and also the benefits of cryptocurrency, what they are, how they operate, what can we learn from them, but also how we can make sure we can operate safely in this new digital world. And shameless plug here, I just responded to an article wrote by Jamie Leverton, CEO of Hut Hide Mining, that I thought I thought very compelling, and we should all take a stake in pledging or advocating for everyone to get a bit more educated on the matter. And that's my conclusion for today. And back to the MC.
Thanks, Mark. That was awesome. And Victor as well. Thank you for that. Okay, so I guess we're ready for our first speaker. and I will pass it off. Mark, are you doing the first introduction?
I can do the first introduction. Give me a moment so I can actually pull my data here. So I'm going to introduce Louis. Just give me a sec here. Sorry. Here we go. So we had a little bit of a chat with Louis before, and we thought that it was really timely for Louis to come back and present about his new thing. So Louis Brion is a Stanford computer science graduate, Microsoft Alum, and is the current CEO of DeFi Current. He has spent multiple years building blockchain-based tools for traditional financial institutions, retail investors, and blockchain sleuths. He is currently building DeFi Current, and we're going to learn more about this, in an attempt to bridge the gap between blockchain-based financial utility and the average individual looking for access to high-quality blockchain-based financial products. So we're going to talk about DeFi usability, and without further ado, I'm going to leave the stage to Louis.
All right. Thank you. I am going to allow, I just got to get my screen share set up. All right, I need to rejoin the call. I'll be right back.
No worry. So now it's up to the MC to fill in the blanks, right? And are you going to tell some joke, Alum?
I got no jokes.
Well, there was actually a comment. There's actually a comment. Maybe we can address that in the chat about I think it's Mohammed here making the point here that there's a tension between. Yeah, you want to speak about it, Mohammed? Yeah, just make your point.
No, I just wanted to share. Thank you for sharing all that information. Super advocate of cybersecurity and all of that stuff. Is pretty exciting to see how innovation happens on that front. But I just wanted to address that you mentioned that, having the fully transparent blockchains is like a key advantage in the space. Everybody talks of it as a key advantage, but I myself am more of a privacy advocate, and I say, let's pull our horses a little bit there. Like, I'm not going to share my live location on a blockchain. I'm not going to share my personal images on a blockchain, like, until we have certain amount of data privacy there. So I feel there's more of a middle ground there where we can have some kind of like data space where it's like, hey, you can have private data and you can have public data. But anyways, that was just the only thing I want to mention, that I'm full for fully transparent blockchains, but hey, not everything.
Yeah, totally appreciate this. Thanks for sharing it. It's important perspective. I'm sure many of us share the same feeling or perspective. Thank you for that. So we have Louis, you're back?
Yep, I'm just waiting for the host permission so I can share my screen again.
Okay, let me do it again. Yeah, hold on.
No worries.
Yeah.
Maybe while you're getting those permissions set up, do you want to just give us a little bit of background on yourself?
Yeah, so Mark
Louis?
covered it pretty well. I have a very French sounding name, Louis Brion. Like you said, graduated computer science from Stanford a couple years back, worked at Microsoft for a few years, doing government type work over there. It was quite interesting seeing the intersection between technology and bureaucracy. And then now I'm working on DeFi Current, where we have had the fortune of being able to pivot for the last 2 years between the various applications that Mark had talked about in terms of building financial products for traditional financial institutions, moving into more family office type things, then gradually moving more and more on chain. So I believe my screen is sharing now.
Yes.
If anyone has
we can see you.
Awesome. So throughout this talk, I just gave my introduction. I'll probably skip over that next, but I want to go into the distinction between utility and usability. I want to talk about, I guess, a small overview of TradFi and some of the functions that it serves right now in terms of offering utility that almost everyone here surely uses, go into how DeFi has bridged the gap and is now offering that utility, but then start to take a little bit of a walk down what those risks are. And I think Victor and Mark talked a little bit about some of those risks in this past month's news, and I'll highlight a few more. And then, with those risks, the DeFi has utility, but then how can the usability be improved? And then at the end, I'll do my DeFi Current roadmap and chill session and talk a little bit about what we're building. I just want to preface this entire talk. A lot of what I'm pointing out are negatives and risks with DeFi and the space in general. However, I have a very optimistic viewpoint that we as a community are on the right track to chipping away at these issues and moving towards a more transparent and equitable future for, I guess, the global financial ecosystem. So aside from my professional history, I'm also a twisty puzzle solver, an avid rock climber, dancer, and avid proponent of a plant-based diet, just to humanize this a little bit. But yeah, without further ado, we'll just jump right into utility versus usability. So when we're talking about utility and usability, we could be talking about a physical product, a service provided, or an experience, for example, hiking or meditation. Usually in other disciplines outside of DeFi, utility would be, or I guess usability could be defined as something like aesthetics or ergonomics. And I'm sure you've heard a lot of adages or sayings about the difference between form and function in the design of a lot of different things. So for the sake of this talk, I'm going to be defining utility as whether something satisfies a need or a want. The example here being public housing. It's useful providing roofs over heads. However, in terms of how pleasurable that experience is, it might be loud. You might not get to pick where you live. It might not be enough space for you and your family to live. But at the end of the day, you get a fairly reasonably priced roof over your head. It is useful and it's providing utility. On the other side, there is usability, which is how pleasant it is to extract usability or utility from something. And that is something that would, I guess, that drives usage in terms of supply and demand. If something has utility, but if one product has utility, the same amount of utility as another, but the other one is more usable, it's much more pleasant to experience, then generally the demand for the more usable product will surge. So the example for that is a mansion where perhaps you have a lot of space, a lot of amenities, it is quite comfortable. Now, DeFi doesn't need to be a luxury for a great experience, and I'm going to walk you through some of the TradFi utilities, how DeFi is approaching this, and then, again, some of the risks before moving on to the usability and how to make DeFi the de facto rails of the financial system, which I think is one of the goals that we're trying to push forward at DeFi Current. Along the way, if anyone has any questions, feel free to drop them in the chat and I will try to answer them to the best of my ability. But yeah, ideologies aside, I'm just going to be talking about what can we do to make DeFi a better experience for end users. So let's talk about TradFi utility. So again, I really like this format. You see a lot of the slides are going to be formatted like this. This is a list, not an exhaustive list. I'm just trying to get my points across in terms of giving examples for some of the topics that I'm speaking about. So in terms of TradFi utility, when I think of banking, I think of asset storage and private lending and borrowing, the interest that you get on the money in your savings account. That's something that almost everyone in a economically sophisticated country is using today. Like, you might hear some stories of people hiding their entire life savings under their mattress, but I don't think that all of you are walking around with a bunch of cash everywhere. Or if you are, more power to you. Walking around with a bunch of cash with you to spend, when you're buying a house, buying a car, making large purchases, you're usually subscribing to some sort of banking or traditional financial institution in order to facilitate those large purchases. Speaking of large purchases, one thing that TradFi is really good at right now and is the de facto system for is money transfer. So first of all, before you have money transfer, you need to have money. Usually that is backed up by some sort of government or some sort of store of value, usually natural resources, military might, or political power. And then once you have that money, you need a way to move it around. So currently there are payment rails such as ACH for debiting, SWIFT again for the banking system, then credit card networks, which many people use to make their everyday purchases. Third in TradFi utility are speculative assets, stocks, bonds, ETFs, markets for these stocks, bonds, and ETFs. Those are tools for hedging risks, funding ideas, collectively pooling money, markets, and the markets help facilitate the movement of these assets. And then finally, the contracts and agreements. This is kind of the infrastructure that allows for all of this utility to exist. Starting from the corporate structure where certain corporate entities are defined as financial entities and they're regulated by whatever governing agency they operate within, as well as business partnerships, providing legal enforcement of contracts and things like that. For all of these slides, again, none of these are exhaustive, but we'll be walking through one by one for the DeFi utility. So in terms of DeFi utility with banking, from asset storage, we now have self-custody. I'm sure everyone has had a wallet at some point where they carried cash, but now you could potentially carry your entire life savings in your ledger, or if you have memorized your seed phrase or written it down somewhere, if you have your own keys, you technically have the custody of your own assets. You don't need a vault to store all of your digital assets. And I'm talking about a literal vault where you might need, for example, armed security to make sure that no one is robbing your bank. Now you just have to make sure that your private key or wherever you're holding your assets is safe. Next, for borrowing and lending, traditionally you'd go through a bank if you wanted to finance the purchase of a home or a car or some other large purchase. And I guess with banks, they use some portion of customer deposits in order to assess whether borrowers are creditworthy enough to take a loan and are worthy enough to pay interest or stable enough to pay interest on that. Now you can do that yourself with DeFi through lending and borrowing protocols. You can provide liquidity for a variety of digital assets and earn fees, or I guess earn the fees for things like swapping or providing some sort of service with the liquidity that you've provided. Next, we're going to talk about money transfer. So money, aside from fiat currency, which are backed again by either military might or political power, or in the past, physical gold reserves, now there are tokens and stable coins. I think one of the more interesting things that I've been thinking about and has been a topic of discussion is the idea of a CBDC for various countries. A lot of legislature has been passed, or at least they have funded examinations of potential avenues for CBDCs. Being an American, it's a shame that the US has been so slow as this, because serving as the world's kind of de facto reserve currency is something that you need to innovate to maintain. And other countries potentially have an opportunity to usurp the United States or other countries as major financial players by playing the space correctly. And then we have payments rails such as ACH, SWIFT, credit card networks, etc. Those are, I guess, the analogous infrastructure in terms of DeFi are L1s and L2s, the networks whose validators, stakers, miners, etc. process the transactions that confirm that all of these tokens or stablecoin transfers are legitimate. They're the ones securing the network. And of course, as Mark had talked about a couple of minutes ago, they're getting paid to do so. Oftentimes, the cost of making these transfers are much lower on decentralized financial rails than traditional financial rails. As a consumer, you might not see it much, but credit card companies charge, full percentage points on transactions, which those could be much lower when moving things at scale, especially on L2s. Next, we have speculative assets. So instead of stocks, bonds, and ETFs, we now have tokens and smart contracts. I want to stray away from those as being purely speculative. A lot of those do have utility in their own. And then interesting innovations with DeFi in terms of being able to move around speculative assets are decentralized exchanges, perpetual markets, which are very interesting financial instrument that has been enabled at scale by blockchain-based technology. I also acknowledge that there are a lot of centralized options for a lot of these things. For example, like self-custody, a lot of people are using Coinbase, or they're using one of the centralized exchanges to house all of their currencies. And perhaps a solution which is a happy medium between both, where you have sufficient transparency into where your money is, how it's being used, but then you also have the safety of, an entire team of people thinking about how to secure your assets. We'll talk a little bit more about that when we talk about usability. Finally, on the slide, we have contracts and agreements. So corporate structures, there is an analogous DAO model where more flat, decentralized, autonomous organizations are able to make decisions and function as a business, although we're starting to find that a lot of these DAOs are being, held to the same standard as corporations, and for legal purposes in whichever jurisdictions their employees or operators preside in, need to be registered appropriately in order to function and pay taxes, right? There are a lot of things off-chain that require kind of taxes to be levied, public services, et cetera. And I am personally not of the mindset that on-chain activity needs to be devoid of regulation, because on the other side, there are risks without regulation. And then finally, business partnerships. I think this is a pretty interesting one, is the idea of smart contract composability, the idea that in traditional software development, you'd have closed private endpoints where you can't get data, you can't interact with other companies' software, but with smart contracts, you're allowed to build on top of other smart contracts and proposals. The most basic example that I can think of is using USDC, US dollar coins, and providing access to treasury yields, or providing access to swapping between digital assets powered by the smart contracts, that the ERC-20 smart contracts that power USDC. So I will take a step forward here and start talking about the risks of the DeFi utility I just mentioned. So first of all, there's regulatory risk, as Mark kind of prefaced in the news for this month. There are a lot of reasons why there's uncertainty in the space. And I believe Victor also mentioned that as uncertainty goes up, or risk goes up, demand goes down, and vice versa. If risk goes down, demand usually goes up. But right now, there is still a lot of risk. We've seen in the past that entire countries have banned digital assets altogether, Bitcoin, Ethereum, et cetera. The OFAC regulations have just blacklisted a bunch of addresses that interact with Tornado Cash, and we're starting to see that the enforcement or the regulation of these needs a little bit more thought and, input from the builders, as opposed to people who are trying to regulate this as a market, similarly to the traditional financial markets. There are also bans and limits on and offboarding. I know Canada recently either enacted or is thinking about enacting legislation about limiting the amount that you can on and offboard between fiat currency and tokens. And then also bans and limits on legal structure, what I was alluding to earlier about DAOs and other organizations working within DeFi, and how they, for example, do accounting, pay taxes, who it has the right to govern the treasury assets of these organizations. Next is smart contract risks. These, again, have a lot of uncertainties about them. When we're talking about, for example, the audit between, or the comparison of audits between CertiK and ChatGPT, there are vulnerabilities in a lot of smart contracts. And one of the risks with smart contracts is they are technically immutable. In theory. In practice, they are very much not immutable. Most of the smart contracts that you're interacting with have the ability to be swapped out at the discretion of whoever owns either a multi-sig, or who deployed the contract, or if the contract is not deployed correctly, a malicious user who has the technical know-how to redirect funds in that contract. So there could be vulnerabilities in the code, just simple logical errors. Economic vulnerabilities, we saw Avi Eisenberg exploit a lot of different DeFi protocols that were functioning as expected. However, their economic models did not play nicely with the outcomes of the users of those protocols, in that the malicious user was able to extract millions of dollars from them. Unfortunately, they bragged about it and are now facing legal repercussions, or fortunately, sorry. And then finally, Oracle or dependency vulnerability, alongside with the composability of all of these applications. If you depend on, for example, another smart contract, and that smart contract has a vulnerability, you are taking on that risk. And I guess as you go up in sort of trophic levels of smart contract integration, you amplify your risk exponentially. The thing that I am particularly passionate about is the lack of consumer protections. While, yes, everything is on the blockchain and technically a public ledger, there is still not a lot of transparency and not a lot of precautions taking about having a good experience for consumers. One of the biggest examples that I think of are with credit cards. If you have a fraudulent charge, you can go talk to your credit card. They'll either work to get that reversed, or they will just eat the cost, and you will get your money back. That's not the case with blockchain technology. Once you send off a transaction, the money has moved from one wallet to another, and a majority of stakers or validators have agreed that the money is gone from your wallet and somewhere else. There's no way to really get it back. There are attempts through centralized exchange coordination to prevent those users from being able to withdraw illicitly gained funds. But at the end of the day, there's no such thing as a chargeback in practice at this point. Same thing with asset insurance. While you may have all of your assets on your ledger, if you lose that ledger, if your private key gets compromised, there's nothing like FDIC insurance like there is in the United States, which insures $500,000 cash in bank accounts across the US. And the same thing with recovery methods. If you lose your private key, if someone else compromises your private key, there are no easy ways to get it back. And I think there's a lot of improvements that could be made in terms of usability that would allow people to get access to their funds. I'm not sure how much everyone here uses things like password resets, but I forget my passwords all the time. Some people resort to using password managers. People lose their physical wallets. There are a lot of real life scenarios that happen to consumers that DeFi isn't quite ready for yet. And then finally, the practical considerations of self-custody and unfriendly interfaces and usability. I'm not sure if anyone here has tried to talk to their aunt or uncle, grandparents, parents about getting into crypto maybe 2-3 years ago, even last year, and trying to talk them through all of the hoops that are required to actually get on chain, and then be able to do things with that. You have to pick a centralized exchange, make sure you don't click the wrong link. You need to do KYC verification, make sure you have updated identification information, attest that you are operating legally within whatever jurisdiction you're trying to set up your custody with. You'll have to go to that centralized exchange, and then Yep, I totally agree. Most people don't end up coming on board because of the hassle of these hoops. Once you have, you've bought an Ethereum on Coinbase or something like that, what do you do with it? Do you just sit it, let it marinate like you would some other stock? Unfortunately, that's what a lot of people do. It's purely a speculative asset as opposed to a utilitarian asset. There are a lot of things that you could be doing. Everything that I had said in the traditional financial utility, you could be using it as savings. You could be earning money on that by staking. You could be providing liquidity, earning fees based off of that. But even then, you'll have to find the right DeFi protocol and make sure that's not a scam. Make sure that DeFi protocol doesn't have code vulnerabilities, no Oracle vulnerabilities. And frankly, most people, maybe this is a bit pessimistic, don't have either the time or expertise to accurately evaluate the risks of what they're doing. I'm sure a lot of you are concerned about, the safety of your assets, but how many of you have actually taken a look at the smart contracts? How many of you have seen that, all of the smart contracts that most applications engage with, whether it's, Seaport with OpenSea or Uniswap, et cetera, those are all ruggable DeFi contracts, and that they are upgradable. And if a certain subset of people decide that they want to reroute the address or reroute the funds, it's possible to do that, for better or for worse. And at the end of the day, I don't think that you can get away from some of those things. Like Mark had said, trust but verify. Like, you can have these multi-sigs with a bunch of people, but you should verify that those people are people who you don't think would rug. So moving back to DeFi utility, you have all of these potential things that you could do, but where can you discover to do all of these things? For example, when you want to eat food, you could go on Yelp, you can go on Google Maps, you can look on DoorDash, Deliveroo, etc., and you'll have a menu of food options with reviews and see where any of the food options are available and the ones that you like, you can just go and pick. With coffee, you know that when you want coffee, you'll go to a coffee house. They'll have plenty of options for you. When you want things that you don't need, but at least you get them the next day, you can go to Amazon. Everyone knows that you should go to Amazon for that. But with DeFi, where do you find out about either the latest news, what protocols are coming out, what new functionality that you as a user could do that you potentially couldn't do yesterday? That is one of the first things that I want to talk about is in terms of usability is discovery. I think discovery is quite poor within DeFi, and let's walk through, a potential scenario for where you are going to discover things. So one thing that you could do is hop onto Google, best DeFi products, best DeFi projects. Maybe that'll bring you to the DeFi subreddit, right? Awesome. Like, there are a bunch of posts here, a lot of people advertising their own things. You discover DeFi Llama. Wait a second, these are a lot of dashboards. Like, how am I supposed to parse through the DeFi, the yields, NFTs, token unlocks, treasury management, centralized exchange transparency, bridging? There's a lot to dive into. All right, maybe you go to Token Terminal and you have more traditional or fundamental overview or understanding of how these types of markets work. That's not enough. You start going to these projects from Token Terminal, DeFi Llama, you start joining their discords. All of a sudden, you have won a bunch of Ethereum, a bunch of Bitcoin, and now people are trying to get you to click links and sign up for random products that are usually scams. You're like, all right, Discord's too mainstream. Maybe I want to go to Telegram. Oh, I guess everyone's doing giveaways on Telegram as well, and you're getting free Bitcoin, Ethereum all over the place. Unfortunately, maybe you live on Twitter. Follow the DeFi Current Twitter. You'll get a lot of we have I guess weekly news updates if you want something on a more rapid cadence. We covered a lot of the topics that I guess Mark and Victor talked about today. Random side, but at the end of the day, you might have tons of tabs open. You might need help. Where do you find I guess what you can do on DeFi and I guess actually get to using it? That's where DeFi Current comes in. We'll talk a little bit about that later. So DeFi usability, I'm going to cover a couple things with discovery, some of the issues with the interfaces, and then talk about the practicality and how it ties into some of the risks that we had talked about before. So say you found one of these applications and you wanted to actually use it. Well, the first thing that you're usually prompted with is, oh, let's launch this app. A lot of times you have to go ahead and connect your wallet in order to do this. One thing that is not out of the ordinary is interacting with smart contracts directly, which I think is a terrible user experience. When you see something like this, where you're trying to execute arbitrary commands on a smart contract that are not very human readable, a lot of things can go wrong. This is a screenshot of the Uniswap Universal Router. It is the one of the largest gas consumers on Ethereum, and most of the front ends interface with the smart contract directly. Okay, once you've done that, a lot of sites require you to do account verification or identity verification, depending on where you live. It's, reasonably tough to get through a lot of that sometimes. Sometimes, you take a bunch of pictures of your ID, you take a bunch of pictures of your face, give some mail, some utilities, etc., and maybe you'll get verified. Sweet. So you made it on to some of these platforms. I also find that a lot of these platforms are very power user focused, not consumer friendly. This is an excerpt from GMX, where you're opening a perpetual position. If you had no idea about financial utility, I guess maybe perpetuals are a little bit more of a gambling person's type of financial instrument, but this UI means nothing to most people. Same thing, if you're going to a lot of on-chain price tracking suites and software, you're going to start to get a lot of trading views on different tokens, DeFi protocol tokens, etc. And that's not necessarily what I see as the point of blockchain-based financial infrastructure. How can we get those utilities, or I guess the utility that TradFi offers, storage of assets, being able to transact upon them, being able to, borrow, lend, stake, get value. There are a lot of holes in that. And I think now is the time to start building for actual usability. If you want to get super hardcore, there are a lot of interfaces here that look like Star Trek terminals, where you're trying to figure out, the inflection point of different asset ratios and liquidity pools and how that might affect price. And I don't think most people want to do that, but large financial institutions, both DeFi and TradFi, are very familiar with those. And I think it is a start for building out applications in the space. Next, we'll talk about practicality. So in terms of the usability and practicality of these things, let's go back to the self-custody, right? With self-custody, there are a lot of hoops that you have to jump through if you want to do that. And if you do get through all of those hoops, again, with the on-off ramping, any regulations, tax considerations, etc. If you lose your ledger, you lose your private key, someone else gets it, there are not a lot of opportunities for you as a consumer to be protected, right? Everyone is giving full trust to Ledger, and judging by their track record, it seems to be warranted right now. But the unfortunate side of these things is all of these applications, centralized, decentralized, they're okay until they're not. We saw that with UST, Terra Luna, Anchor. You have big names supporting FTX. We saw what happened there. I think this is where trust but verify really gets tested. Once you've gotten on chain, there's no widespread adoption. Everyone has heard about the people who are buying pizza with Bitcoin years ago, potentially wasting hundreds of thousands, if not millions of dollars to buy digital or to buy pizza 10 or so years ago, yeah. But right now, it's very hard to go up to your local convenience store, supermarket, etc., and purchase things with crypto. It's not the public or the people who need to be accepting these assets are not doing it yet, partially because of a lot of the risks that have been shown, or I guess that I talked about previously. And then finally, with regulatory uncertainty, you could amass, an entire mining operation in China, and then next day the Chinese government says, no more Bitcoin mining, right? Until a lot of the legal frameworks are set for these new technologies, large corporations or large capital allocators are going to be hesitant to jump into the market. Now, how can we improve a lot of these things? Well, I think working on improving usability and making these experiences pleasurable for average consumers, and again, this won't happen overnight, are what we need to do in order to, get 1, 10, 100, 1,000, 1 million users using blockchain-based financial technologies daily before these larger financial institutions do it. And I think, again, the space is growing. Yes, we are in a winter. Yes, there's a lot of hype and attention drawn to perhaps the wrong things in the space. Whether or not those hurt the long-term effectiveness of crypto as a whole, we're finding that out now. So time to jump into what we're doing at DeFi Current. First, we're trying to provide a context layer to a lot of the actions or interactions that happen on chain. You'll see here, these are some of the mocks that we're sending out to wallet companies and kind of partners to sell one of our products called the context layer. What this does is it provides a human readable layer to, I guess, blockchain transactions. You can see on the left an already converted layer, but on the right, you have a more clear before and after. Apologies if the text is too small, but you see on the left of the right image in the before column, you just get a bunch of addresses and balances being shifted. But what did you actually do? On the right, we've had Tian, one of our designers, who is actually just lives in Toronto. Shout out to Tian. Mock up, what these wallet providers could be doing with access to our context layer. You now get a more human readable, more akin to like a credit card or banking statement, granted those aren't amazing as well, version of your transaction history where you can see you staked or unstaked assets, you swapped assets, you see, what you lost, what you gained, the gas fees, whether you gave permissions to people. So for example, those finished transactions, those are access permissions for example, Lido and Convex to access your certain assets for them to do things that you approve them to do. What we're doing with DeFi Current is we're first improving the discoverability of a lot of a lot of functionality of Web3. So by applying our context layer to tokens, NFTs, DeFi protocols, and networks, we're hopefully making them less technical and more approachable for the average person. Our next step is adding in interactions. So if you see a token, you could buy it. If you see an NFT that you are interested in, you could put an offer on it. If you see a DeFi protocol that you're interested in participating in, you're able to participate in it right from the app itself. This is similar to what a lot of wallets do. However, at DeFi Current, we don't want to get into the wallet security business. We are purely working on the usability side. And finally, once we do that, we want to polish and evolve as the industry grows, because as a lot of these DeFi applications popped up in the last 2 or 3 years, I'm sure many more will pop up in the future. One of the more interesting ones that happened, I think, last week was Maple Finance offering on-chain access to US government treasuries. I think that's a great innovation that allows DAOs to have access to US government-backed financial institutions and the treasury yields associated with that. I think this has even bigger implications on the global market. For example, if you lived in Venezuela or Africa or in a lot of unstable political countries, you now have access to a currency that is not, going through hyperinflation, and access to financial products that won't be seized by the government theoretically, by providing access to US dollar-based or other currencies or other financial systems outside of their home country. And if you can get onto DeFi, if you can get onto Web3 blockchain-based financial institutions, then you have access to stable yields, non-deflationary currencies, et cetera. So with that being said, we have a beta here. We're hoping to launch in Q3. Right now, we are supporting token and DeFi, discovery. We're working to support NFT and network discovery in the next quarter. And we'll hopefully be able to move into interactions swiftly after. If anyone here is connected, we're looking to raise again in Q3 and Q4, trying to close out by the end of the year. But you can find updates on what we're doing at our Twitter, Discord. Again, access our beta here. The QR code is for the beta. So feel free to follow, join our Discord. Quite small, we're just ramping up on our social media presence right now. And then feel free to follow me on Twitter or connect on LinkedIn if you have any questions. We'll be working in the space for a while. We've been doing it, full time for 2 years at this point. But yeah, thank you for listening to me talk about DeFi usability as opposed to utility, some of the risks and the directions that we could be working together on in order to make this entire space better for everyone. So with that being said, I'll we'll leave it here, and I'll let one of the hosts take back control.
Yeah.
Thank you
Yeah,
for
thank you so
listening.
much. Yeah, I really appreciate it. Thank you so much for that that overview, and really loved the kind of the touch on some of the fundamentals, because we often just jump right into the talks without covering some of that stuff. So I think that's very important. So thanks for doing that.
Yeah,
We
Luis,
are
also,
in a
I
yes.
want to say that, Luis, your team is working on a very, very important topic. As a person who has been in this space for so many years, I still find the interface, the usability is really not mainstream. You are really working on a pain point for the adoption of DeFi. So kudos to you and your team.
Thank you. Yeah, I mean, we found that the utility is coming, but now we need to make it user-friendly, right?
Mm-hmm. Absolutely. I think we're a little bit pressed for time, so maybe we'll just have one question from the attendees, and if there's any other questions, Luis, if you don't mind, just just chiming into the chat. If there's questions that come in the chat, you can maybe answer them. But does anyone have a question they'd like to ask? You can feel free to unmute yourself, or if you'd prefer, just you can ask it in the chat.
Yep, and I'll be hanging out in the chat if anyone has questions. And again, feel free to reach out on Twitter, LinkedIn, or I guess you can ask Mark for my contact information other than that, but yeah.
Okay, awesome. Thank you so much. I'm sure we'll get some questions streaming in through the chat. I will, I don't know if we have, sorry, was there a question?
I was going to ask a question here, but it's more
sure, go ahead.
For Lewis themselves, but yeah, so I was just looking through the DeFi Current really here, and I was just checking out the beta application that you shared, and I was wondering, so do you guys work with general wallet providers? Do you guys pull data yourself from protocols and analyze on your end before you guys provide the user experience that you talk about, right? So how exactly do you guys go about getting data on your platform?
Yeah, so I guess the data amalgamation is what I'd like to call it, is a huge struggle of what we're doing. We're, I guess, combining data from multiple data sources, both paid, free, decentralized exchanges. We're running a number of validators across multiple chains in order to pull, for example, transaction balance data. And I guess a big part of that is, while we're doing that, we found there are a lot of holes in just even pulling transactions from up and coming chains, or pulling balances from up and coming chains, and documentation isn't really there. So we're still quite early in the space, but I would say 50% of the work we're doing is on the back end, trying to figure out how to reconcile, for example, decentralized exchange pricing data with centralized exchange pricing data, trying to rationalize, which is more accurate, which is more actionable, or what kind of data the users need to see. So it is a lot of data massaging. And in that sense, we're trying to piece together a lot of unsolved puzzles to offer a cohesive experience. And I think that's part of the challenge.
Awesome. Thank you so much. I've got a couple of questions as well. I'll drop them in the chat, Luis. And if anyone else has them, please do. We're going to swing to the next speaker. So I'm going to hand it off to Johnson, who's going to do the introduction, and we'll get underway.
Thank you, Alum. It's my pleasure to invite Rohan for our next talk. Rohan is an accomplished software developer, and he has been in the crypto space since 2017. Funny enough, this is, I'm just reading this from his bio, that he once made an app which was kicked out from the Google Play Store, which motivated him to work in decentralized tech. And most notably, right now, he's the co-founder of Cypherock, which is a hardware wallet without a seed phrase, intending to solve a lot of these issues for onboarding the next billion users. And I'm not going to take any more time. Rohan, the stage is yours. Take it away.
Thanks, Johnson. Really appreciate the invite. And while I was listening to Mark and Lewis as well. I think a lot of common points really came up, and specifically after, I guess, the whole ledger incident, I think people have become super paranoid about everything now in the space. So it would be definitely been interesting discussion around the same. Can you please allow me my screen sharing?
Yep, Victor.
Yeah, I will do it. Sorry.
Thank you.
Now you are the host.
Yep, thank you. I hope my screen is visible, right?
Yes, we just saw it.
Cool. Thanks. So yeah, as an intro, I'm Rohan. I'm the co-founder and CEO at Cypherock. And today's talk would be more focused on building sort of a new approach towards, private key management, storage, recovery, things along those lines. Backing up a little on who I am. So I go by Rohan Agarwal 94 on both Twitter and Farcaster. And I'm majorly also a big contributor on both Orange DAO and the Gnosis DAO in the space. I genuinely felt, so if I go back to my personal story, this is, more 2017-18. Obviously, as Johnson mentioned, I had released an app in Play Store. As a college kid, I, sort of grew it to $1,000 per month in revenue, which is, it's everything for a college student, the amount of money. But in 3 months, Google removed the app out of the Play Store because of their recent policy changes. And, I mean, it was not a big deal, the money was not a big deal, but I realized that, these things happen on a very frequent basis to bigger companies who have, people working for them and have their livelihoods dependent on them. And so the revenue just sort of vanishes over time for them, in a flash. And so this was one of my personal, motivation to build in decentralized tech and, crypto in general. Apart from that, at that time, I was personally using Ledger. And then this video dropped basically. So if you can see the screen, wherein the guy is basically playing like a snakes game on a Ledger device. This video is still live. So one of the few things people don't know about is most of the hardware wallets have been hacked. And if you talk about the biggest one, both Ledger and Treasure, they have been hacked before. So these guys are basically called as wallet.Cypherock labs. They played like the snakes game on the Ledger device. And even if we talk about Treasure, just yesterday, another security firm hacked the newest Treasure Model T. So both Treasures Model 1 and Treasures Model T are now have basically not just security bugs, but I would say unfixable bugs. So what do I mean by unfixable bugs in this context is if I get your Treasure wallet, with 15 minutes of time, I can take out your seed from it, right? So that's how easy it is what I'm trying to say. And so, and at that time, 2018, I personally was using a Ledger device myself. And when I saw this video, I genuinely shat my pants because I thought that these things were unhackable in some sense. And that's what most people sort of presume them to be. But, over the course of time, I realized that, there is if you just think from first principles, there's nothing 100% secure in the world. No system can be made 100% secure. And that was sort of our, motivation to get into building sort of a next gen hardware wallet or try to think or try to rethink the wallet infrastructure from the ground up. Secondly, I think the second biggest challenge around There's some noise, I guess.
Yeah, sorry. Can everyone just mute themselves? If you're off mute, and Victor, do you mind force muting
Okay.
for the folks that are not speaking? I think Antonio. Yeah, if you can mute Antonio.
Because Rohan has the host.
Oh,
role.
I see.
Okay,
You want
Rohan,
to-
if you could, if you could force mute Antonio, please. Thank you.
Antonio, okay, Antonio, right. So, sorry. I can't find him. Okay, good.
Thank you.
So sorry guys. So yeah, I mean, that was the first thing we realized. The second thing was around seed phrases. So I think like, even if we just like back it up a little on the Ledger Recover product, I think their intentions are correct, which is, seed phrases are not going to scale beyond a point. It works for maybe like 5-10 million people in the world, but if you want to go to hundreds of millions and even to someday 1 billion users, like seed phrase just doesn't work for them. It's too much to ask for most of the users, and unless you are tech savvy enough, like you will probably end up losing them at one point or the other. And because these things have like a single point of failure, sort of like a irreversibility around this, so it is very difficult to expect that you will never be hacked throughout the life cycle of you using some or the other asset, coin or token. And so we realize that every wallet today is sort of structured in a similar way, which is you have one set of keys inside the hardware, and that hardware could be your PC, your smartphone, or even your a dedicated hardware device like Ledger doing the transaction. And then you make a copy of that in the form of a seed phrase by keeping it on a piece of paper. But in reality, the seed phrase essentially are both a security and a convenience nightmare. Like, if you're traveling somewhere, like you have to think about, hey, if I'm leaving my seed phrases, I'm hoping that no one else gets hold of them. And similarly, there's a saying in security, which is you are only as secure as your weakest link in your security setup. And while you're using a wallet, like your wallet doesn't then become your weakest link. It's your seed phrases that become the weakest link. And so even if your wallet is unhackable, still if someone gets access to your seed phrase, your wallet security is of no use. And lastly, the insight we realized was, if ever there is like a seed phrase hack, the problem is a normal user doesn't realize the difference between a wallet and a seed phrase. And so there's literally no way to know whether your wallet was hacked or whether your seed phrase was hacked. But for a consumer, they'll always blame the wallet provider that they were hacked. Whereas in reality, it was probably that they were irresponsible about safekeeping their own seed phrases, due to which they got compromised, right? But a consumer will never sort of admit to that, and it will, in the process, the brand, the wallet provider, will eventually sort of suffer because of that. And in all honesty, I feel that should not how it should be. That's for the industry to solve for. That's not for us to expect the user to safeguard those seed phrases securely, to be honest. That is my personal take on this. Sorry. Yeah. The third thing we realized was, like if you think about the self-custody stack today, it has 3 layers, but unfortunately the current wallets only cater to the first layer, which is the transaction layer. But the other 2 layers of the self-custody stack is the seed phrase management, or sort of the recovery, and the third is the inheritance. Now, the fundamental problem around inheritance, specifically if we talk about crypto, is like you cannot give your seed phrases or your private keys while you're alive to someone, because hypothetically there could be 2 situations. One, what if the relationship changes and he or she runs away with the assets? And secondly, because now they have also access to your, even if you trust them enough, and now they have access to your assets, they are also now a target for like, social engineering attacks, or, remote attackers try to, hack through them for your assets. And their security setup might be very different from your own security setup around your crypto assets. So that's one problem. And for obvious reasons, you cannot give it after you're dead because you're already dead. So how do you give these keys? When do you give them? And how do you make sure that the privacy and control of the assets are maintained throughout? So it's a very fundamental problem to solve for. Unfortunately, there is no sort of inheritance or recovery infrastructure that sort of exists today. And all of the attempts that has been made so far has been way too technical, way too chain specific, not something that you could expect your lesser technical folks to be involved in the process, or have been very centralized that it loses the essence of self-custody in the first place. So this was the third fundamental issue we realized with the wallet infrastructure. And lastly, with the with the whole ledger recover controversy, people initially used to think that hardware wallets cannot access their assets by any means. But with the whole ledger recovery thing, people actually, so with the FTX thing, people became paranoid about the exchanges and then transferred the assets to hardware wallets. And then with the whole ledger recover saga, they became even more paranoid now about hardware wallets, right? So that is sort of the user behavior shift we observed. And when people started digging in, they realized, holy shit, even these hardware wallets, there's a chance that if there's a malicious software update onto the hardware wallet, maybe internally from the company itself, there's a non-zero chance that they might lose their assets themselves. Or if we go through the ledger recover route, maybe there's the government who can force ledger to sort of subpoena, to sort of give away the encrypted charge, which also can be decrypted by ledger, and then eventually the seed is given to the government. And so what we realized at Cypherock was it's very important to maintain the core ethos of Web3 in itself. And so if we talk about blockchains, we think of them as having core values around decentralization, being trustless. But the problem today is, at the end of the day, the users still end up trusting their wallet provider. And then if you trust them long enough, things like these happen. And so what we thought about was, hey, is there a better way to make wallets more trust minimal per se, right? So that these issues cannot happen in the case of our wallet. And so, everything around these problems, we rethought everything from first principles. And what we came to the conclusion was, again, the first thing is there's no system in the world that is 100% secure. That's just not practically possible. Secondly, what we realized was, hey, if blockchains are going to be decentralized and trustless, which was like sort of the original intent of removing single point of failure in systems, why can't we have private keys also decentralized in some ways, right? Why are we trying to centralize them in, keeping them in like one wallet to make transactions and then sort of backing them up on a seed in the form of seed phrase on a piece of paper, and now these two becoming two different single points of failures. And so, rethinking the whole thing, we realized if the private keys do not exist in one single place, then that would ensure security of the keys, even if one of the hardware components gets breached or a threshold number of hardware components gets breached, right? In the case of Ledger or any other product per se, or any other wallet per se, if the hardware component breached, that would mean that your funds are compromised, or if your seed phrase is breached, your funds are compromised. But if your keys never exist in a single place, then if one of the hardware components gets breached, that would not mean that your funds are compromised. So that was like our whole, initial germination of the idea around Cypherock to begin with. And lastly, what we thought about was, hey, a user might never need a seed phrase if it is not practical enough to lose the private keys in the first place. So today, if you think from first principles, why do you need a seed phrase is because what if you lose your private keys? That's the reason why you need a seed phrase in the first place. But if you don't lose your private key to begin with, you might never need a seed phrase backup, in the way we do it today. And then, going beyond thinking from these first principles, we realize, hey, multisig is great. Like that sort of fulfills many of the, security advantages that we wanted the wallets to be. But we realized what the core problems with multisig were. It is too complex for consumers. It is too expensive for doing, normal transactions. It's chain specific. So, and because these implementations are chain specific, all of the chains don't have the same sort of Lind effect on the security. And so I personally maybe trust Bitcoins and, maybe Gnosis safe for Ethereum. But if you talk about the newer chains, like they'll never have the same set of Lind effect for that security. And so what we realized was, hey, we need something which is much better in UX than multi-sig wallets, but more secure than the current single sig wallets. And with the current single sig wallets, you get into the physical hackability side of things and the seed phrase, apart from the other things that we sort of discussed. So coming to Cypherock, so we built Cypherock X1, which is sort of the safest hardware wallet for your crypto today. And we purposefully branded it not as a hardware wallet, but more as a new category, which is sort of like a hardware wallet, which I'll discuss in the further slides on why we think this is appropriate to sort of do so. So it took us like almost 3 years of R&Ds. There is 3 different core components, once you get a Cypherock wallet. So the first is the X1 Vault, which has a joystick, has a OLED screen and a basically like a NFC hardware to communicate with the cards. The major purpose of the hardware is to basically do offline computation and verification, and technically it has a dual chip architecture inside it. The second component is the X1 cards, which is majorly for storage of the parts of the private key. And these cards are basically EL6+ certified cards. So these are the exact same secure hardware used in the banking industry for making your debit cards and credit cards. So it's the same secure hardware used in the banking industry in the past 50 to 100 years. So we just took the same secure hardware from the same manufacturer and repurposed it for the crypto use cases. And the third component is the SciSync desktop app today, which is majorly for transaction construction, portfolio management, for doing your crypto inheritance and things like that. Okay, how does it work? So the way it works is, as I said, instead of storing the keys in a single place, we use something called a Shamir secret sharing, which is sort of the parent technology behind multisig. But the best part about this is it works off-chain. So it's not chain specific. You can apply it to any sort of information per se. So we use Shamir secret sharing on your core private keys, or sort of the core master seed, which sort of in layman's term, it sort of decentralizes that key into 5 parts. All of those 5 parts are stored into these 5 components. Once you get the product, you get 1 of this device and 4 of the cards. And so your keys are sharded into the device and the 4 cards, which you can keep in different locations. So you maybe, kept it in bank locker or kept it in your home. Another one could be in your office or wherever you want to keep it. But it sort of works similar to multisig in the sense that whenever you want to make a transaction, you don't need to fetch all of the 5 parts. You just fetch the device, which is the X1 Vault, and any one of the cards to make a transaction. So maybe fetch the second card, tap it on the hardware, enter the PIN that you had set, and your transaction will be done. So what do I mean by this? So what is the advantage of this? The advantage of these are manifold. So one is it solves the loss problem optimally. So the loss problem is, even if you lose any 3 out of these 5 things, your funds are still recoverable. So let's assume you lost these 3 cards, your funds are still recoverable from the device and this 1 card. Or if you lose the device and the 2 cards, your funds are still recoverable from the remaining 2 cards. So you need any 2 at any given point in time for your funds to be recoverable, even if that means that your device is lost. So it gives you sort of 3 extra lives against your own assets, specifically when you're thinking about self-custody. In the case of current wallets, if you lose the wallet, you're screwed. And at the same time, you lose the seed phrases, you are screwed in some sense. The second advantage is around theft. So the way it solves the theft problem optimally is for a hacker to compromise your assets in this case, they'll have to first find the locations of at least 2 out of these 5 things physically, whether that's 1 card, 1 device, or 2 cards. So they'll first have to find the physical locations of these 2 things out of the 5 physically, and then crack open the pin on top of this, and only then they'll be able to hack the asset. So it's now exponentially more difficult for a hacker to compromise your assets. In the case of current wallets, if they manage to get hold of the device in which the keys are, you are screwed in most cases. And if they get the seed phrase, you are definitely screwed because it's literally your private keys exposed out on a piece of paper. The third advantage is you don't need, and this is the biggest advantage, while you're creating a wallet today in any other crypto wallet, you have to write down the seed phrases while you're creating a wallet, whether that's a ledger, whether that's a MetaMask or any other wallet per se. And that becomes a very big friction point for a user. But with Cypherock X1, while you're creating a new wallet, you just tap the 4 cards one by one, set up the pin, whatever you want to set as an additional layer of security, distribute these cards as you like, and then that's it. You never need to write down your seed phrases ever again. So that, I think, is it significantly reduces the time to create a secure wallet for yourself. Maybe in Ledger, it takes you 10 minutes to do it. With Cypherock, it is less than 3 minutes to do it because you just tap the 4 cards, set up the pin, distribute these cards, and you're done, right? So fundamentally, what it changes is today you have this distinction in the wallet, which is you have one wallet signing device and you have a backup of that. We sort of merge both of them in the same product in the sense that whatever you use actively for signing, that's your signing product, and the rest of the cards which you don't use automatically become your backup in some sense. And you don't need to sort of manage all of them in the sense that you need any 2 out of those 3 cards to recover your assets. So even in that case, there's no sort of single point of failure. The fourth advantage of this is it gives you customizability around your security, right? So if you are someone who's like heavily optimizing for security, well, you can keep these cards into continents if you want, per se. That would give you like the maximum security against environmental damages, all of those risks that you can think about in crypto. That will give you the most advantages against all those kinds of risks. Or if you're someone who want to optimize a little on convenience and then on security, then the ideal way we suggest is, hey, keep one device, 1 card in 2 different rooms of the home, and then the rest of the 3 cards still should be away from the home, so that God forbid something happens to your home, the house burns down, you still have those 3 cards, and you need any 2 out of those 3 cards to recover back your assets, right? So it gives you that sort of flexibility around choosing your own, your own spot between the spectrum of security and convenience, right? So these are the 4 core advantages with an architecture like this. Coming to why I called our product not just as a wallet, but as a vault. So what we fundamentally realize in the space is people are not just going multi-chain, but they're also going multi-wallet. So they have like a MetaMask wallet for doing degen stuff. They have a Ledger wallet for long-term storage. Maybe not anymore, but some other hardware wallet for long-term storage. Phantom wallet for doing Solana stuff. And so because of this user behavior, there are 2 core problems that arise. So one is it becomes very difficult now to manage all of the different seed phrases of all of these different wallets. That's problem number 1. And problem number 2, which is even more bigger problem, is there's no single interface right now for you to manage or view your portfolio across those different wallets in one single app, right? So if you want to check your portfolio, you have to go to different wallet interfaces to check portfolio on that. But there's no single interface where you can sort of view all of the portfolio across your MetaMask, Ledger, Phantom in one single place. So that was the second problem that arises because of that behavior. So solving the first problem, which is our second use case of the product. So the first use case of the product is basically like a 10x better hardware wallet without a seed phrase. The second use case about the product is hey, if you don't want to use a product as a wallet, you still continue using your MetaMask, your Ledger, your Phantom wallets, and then take all of those seed phrases of those wallets instead of keeping them on a paper or a metal or maybe like a Google Drive. You use our product as a seed phrase backup manager for all of those seed phrases. So the way we structured our product is not just as a wallet, but also as a wallet aggregator. So with Ledger, you can only have one seed phrase, or maybe Treasure only have one seed phrase per product. In this product right now, you can secure up to 4 different seed phrases inside the same product. So you take your MetaMask seed phrase, take your Ledger seed phrase, take your Phantom seed phrase, secure it, enter it all into this product, and it will again, have the same sort of security mechanisms. It will sort of decentralize your seed phrase in the same way into the device and the 4 cards, which you can distribute. And you can still continue using your current wallets. In case tomorrow you lose your Ledger and you buy another Ledger, now you need the seed phrase of your old Ledger. You just fetch any one card, any one of the 4 cards, you tap it on this hardware, enter the pin that you had set, and there's literally an option on the device which says view seed phrase. You can click that, you can view the seed phrase, and then basically import it into your new Ledger to recover back your old Ledger asset. So in that sense, this product, then you can choose to use it as a wallet, but you can also use it as a seed phrase backup manager for all of your other wallets, or sort of like a forget password button for your Web3 wallets, right? So that was the idea here. And the third use case is, once you have imported those seed phrases of your wallet, what you can do is you can sync the device with the Sizing portfolio app. So let me show you how the desktop app. So this is the current Sizing desktop app. So once you sync the device, the Cypherock X1 Vault with this Sizing portfolio app, you can actually view all of the wallets portfolio in one single place. So these are my 4 wallets that I have on my personal level. So these are my Degen and Docs wallet. These are my 2 wallets that I've created on the Cypherock itself from the ground up. Like one is where I have KYC, one where I don't have a KYC. Then there is like a Cypherock wallet, which is my company's assets that initially was sort of secured through Ledger. I imported that seed phrase into it, and now I can even view its portfolio in this app. And then this is my MetaMask fund. So if I go back to my MetaMask wallet, it's like I have maybe like $60 or something stored here, and I can basically view all of the same assets here itself as well, right? $60, $65, whatever. So I can see all of my combined portfolio and coins in one single place. I can even go more granular, saying, hey, how is my Ethereum moving across those different wallets? So even you can go even more granular in that case. So that's the neat part about this. Secondly, if you want to do emergency transactions, so hey, maybe my MetaMask is not available right now, you can even make MetaMask transactions from this product itself if you want. So that's the second biggest advantage about this. And the third is, if you're doing accounting and taxations and stuff, it becomes a pain to sort of fetch all of those and reconcile all of those transactions. But with this, what you can do is you can actually track all of the historical crypto transactions in one single place across those different wallets that you own. So across your Ledger, MetaMask, Phantom, whatever, you can actually track all of those historical transactions in one single place. So our idea with this is, if we can build something which is more secure than anything else, people will be able to trust it with all of the other seed phrases. And once they can do it, we'll be able to aggregate everything around your crypto history in one single place. Today, it's about coins, tokens, but tomorrow we are going to, integrate your NFTs, your DeFi positions, even your exchanges, all in one single place. That's our eventual goal with this is. So that is the whole idea of like becoming like a crypto wallet aggregator per se. And coming back to like the Ledger recover issue, which is, hey, how do we solve for insider thefts? What if the hardware wallet themselves push a malicious software update to take away the crypto private key? So today, unfortunately, that's the case with all of the wallets. So you're trusting your MetaMask, you're trusting your Ledger, you're trusting your Treasure wallet, that they're not going to push a malicious software update or firmware update to which takes out your private keys from the hardware. And Ledger actually admitted to that. So the way we actually, we thought about this problem way back before even it became like a topic of discussion. And we said, hey, is there a way to make the wallet more trustless or more trust minimal per se? And so the way we designed our product is actually to sort of cater to that. So the way we designed it is once we ship the product out to you, only the device is upgradable to support new coins, but the cards are never upgradable. So the cards are always cold. And so what that means is even if there's a malicious developer inside Cypherock, hypothetically, and he pushes a malicious software update, he's only able to compromise the device, but he'll never be able to compromise the cards because the cards are never upgradable per se, right? So it gives that additional layer of security against something like an insider theft from the wallet company itself. So that's one way towards solving the problem. The best way to solve this, apart from doing that, is also open source. So we are also open source. Anyone can check out the source code on our GitHub. And even more important than being just open source is actually having reproducible builds. So what do I mean by that is, you could be a wallet company tomorrow and say, hey, I'm open source, but hey, how do you verify that the open source code that you're claiming it to be is the same code running on my hardware wallet, right? There's no way for me to verify that. Well, there's a company called as Wallet Scrutiny, which does exactly this, which is they verify whether the source code that you're claiming it to be open source is actually the same source code running inside the hardware or your wallet or not. And we are very fortunate enough to say that we are only one of the 6 hardware wallets in the world that have reproducible builds verified by these guys. So I think they're doing a tremendous job in sort of educating the users around having their wallets to be open source. And even more so after the whole Ledger Recover incident, I think it's very important to use wallets today which are open source and have reproducible builds in the hardware wallet running. The last part is more around solving inheritance and recover. So I think, as I pointed out similarly before, that the Ledger Recover intentions were always right, which is, removing seed phrases from the equation, solving for crypto inheritance and things like that. But on a personal level, I disagreed with the way they were trying to solve it. And so we actually, while we were building the product, we said, hey, inheritance is a big thing. Like if crypto needs to succeed as an asset class, the inheritance of the assets should be in some ways solvable. And so the way we have designed the product actually cater to that in the first place. So I'll give a very high overview of how we are thinking about solving this problem. It is still in the design phase right now, which we are intending to, release this feature, the inheritance feature, in the next 2 to 3 months, but happy to take up any questions or feedbacks you might have around this process. So as a user, you get 4 of these cards in one of this device. There's an initial setup with the inheritance service. So you give card 1, let's assume, to a lawyer, right, who's going to eventually get the assets in case something bad happens to you. Then what you do is there's an inheritance on our desktop app, on our sizing desktop app. We are going to have this inheritance service feature enabled, wherein you are going to write down the last message you want to give to a lawyer in case something bad happens to you, right? In that last message, what you do is you write down the location of card 2. So card 1 you gave to a lawyer, and card 2's location you write down in this last message. Now, this message is sent to the device, and this message, along with the PIN that you had set for the wallet, is together encrypted by a key, which is individually stored into all of these 4 cards, right? And then once this message is encrypted, this encrypted message is sent back to us, to Cypherock, to be stored on our server. So if you see this initial setup, we as Cypherock cannot screw against you because all we have is this encrypted will or message, which we can't make any sense of. You as a user, while you're still alive, you still have the 4 cards, you still have the device, you still have the PIN, so you can make free transactions all you want. Your lawyer also cannot screw against you because all he has is just 1 card, which is not enough to compromise the assets, right? So this is the initial setup. Then the next step after this is we run something called as a heartbeat protocol, wherein we are going to ping you every few months to check whether you're dead or alive, right? In case you say, hey, Rohan, we are still alive, perfect. Like, the timer resets to the next 6 months and we ping you after 6 months and stuff. It's configurable according to you. It could be 3 months, it could be 6 months, whatever you set with us. So that it continues. Now, in case something bad happens, you don't reply to us, even in the buffer period, so we are going to have a buffer period where we follow up with you every few days, few weeks, whatever. Then what we do is we send this encrypted message to your nominee, which is in this case the lawyer. Now, this is very critical part of the infrastructure. So only one of these 4 cards can decrypt that message, not even us at Cypherock, not even any other Cypherock wallet user. And this is where the non-upgradability of the card helps, because if this was upgradable, or if this solution was sort of like a software-based solution, it would be very hard for any consumer to trust the company that they can't screw against the user, essentially, which is what the reservations were around the whole ledger recover feature. And so in this case, the nominee gets the encrypted will. He has this one card. With that one card, he decrypts the message. In the message, he finds the location of card 2 and the PIN. And so now he has 2 cards and the PIN to basically recover the assets. So this is like the basic premise of how things are going to be structured. Obviously, there are way more customizations and configurations we can build on top of this, but the base layer will be something like this, wherein without KYC, without all of the custodian stuff, you can reasonably be sure that your funds will be sort of recoverable. And then you can, if you want to go through the legal route, you can have the nominee to be like a trust who is going to be the one responsible for distributing the assets. If you're like, hey, I don't want to go to the legal route, well, you can do it with the same process, the nominee to be maybe someone like your wife or someone in your family, so that you can completely bypass not going through the legal system and doing it internally, the whole process. So I would still go to the sense that I would say it's not perfect, but it is 10x better than what it is right now. And I think we are just going to build on top of this to make it more configurable and more robust over time from here on. And yeah, I think that comes to the end of my presentation. Happy to take up any questions you guys might have. Just for FYI, Cypherock X1, after the whole ledger incident, we got great inbounds because we are more on the paranoid side of things in building our wallet solution. And so because of that, we were running a campaign. So, people can buy Cypherock X1 today. By this week, they get available at 75% off, which is $100 today. The offer ends this weekend. And on the right side, it's like the ultimate guide to crypto security. You can scan the QR, you can read about it. Like, we are basically wrote down like the best practices of your crypto security hygiene, like how to maintain burner wallets, like a hardware wallet, how do you keep hackers away from you, all of those stuff, like in one concise blog. So you can go through that and read that, and yeah, happy to take up the questions. But thanks for listening. Really appreciate everyone, and thanks to Johnson especially for giving me this opportunity today.
Thank you very much, Rohan. This has been a great presentation, and thank you so much for the discount. I know personally that once I shared this with another organizer, like with Victor, he was like, "Hey, I got to find this stuff. I got to buy this stuff. Where do I get it from?" And
awesome.
And yeah, but this is something that we love. Yeah.
Yeah, Rohan, you are again address a very, very pain point that a lot of people have, is the key management, the security, and so really, really great that you're working on this project. I'd love to get a copy, take an order from your website, and thank you for the discount. And do you have any independent review of your product?
Yes. So in fact, Victor, right? I'm sorry. I hope I'm getting the name right.
Yes. Yes.
So Victor, we actually went to the same hackers who had Ledger, the guys who had the Ledger with the snake game, right? We went to them we said, hey, if we ever want to prove to the community that we are secure, we need a security audit for them. So these guys are called as Key Labs, which runs this sort of side project called as wallet.fail, in which they hacked the Ledger and Treasure wallets. They took 3 months to audit it. And they said they successfully audited the product. It's live on our website. It's an open audit that they done. And every concern they had, we have already all resolved it. It's on the website for anyone to read through all of the the security report they did. And they even went to say that the wallet has so many new innovative features that they have not seen any other wallet before. So it's all on the website. You can actually go read the report. It's literally on the landing page.
Oh, great. That's definitely a very helpful. And do you have any user review, like people, organization or whatever use your product, and
So
do they write any reviews so far?
Yeah, I mean, you can look to our Twitter. I mean, everyone who writes a review, we say, like, feel free to post it publicly on Twitter. So you can check out our Cypherock wallet Twitter account for anyone to see what the reviews are. We just launched about 3 to 4 months ago. And so far the product already secures at least $1 million in crypto assets.
Wow.
Yeah.
How many million? Sorry, how much?
1 million.
$1 million.
$1 million.
Great.
Yeah.
Okay.
That means that, okay, people are finding value in this apart from their existing hardware wallet solutions that they have been using for, right? Otherwise, it wouldn't make sense for them to switch it over to something like this. And I mean, I would say like our product, because just not acts as a hardware wallet, but also as a wallet aggregator. So it already is a value add for a lot of people who are already using like multiple other hardware wallets today, like maybe Keystone, a Ledger, or Treasure, or a MetaMask, because it gives you that sort of portfolio view and the seed phrase backup manager, which you can't find in any other wallet today per se.
That's great. Thank you.
Any other questions? Mohammed, you look like you have a question.
No, I think I did have 2 questions. One was a little technical, but I think you
Go for
answered one of them in part of your presentation. But I was just talking about like your key sharding, right? And how your encryption model stores the keys. When you said about like actually breaking through, we still require more than 2 keys to actually derive the private key, right? That is the key part of your technology.
You need at least 2.
2 to sign or 2 to crack the key?
So it's like, see, Shamir secret sharing is sort of quantum proof. So you have to individually crack both of the hardware components. So you have to crack the device and the card, or you have to crack 2 different cards. And these cards individually have pin protection. So it's not that the device has pin protection. The pin, once you set, it's individually on the device and individually on the cards. And the encryption is not on the pin itself, because that would mean a very small sample space. That's where the EL6+ certification really comes in, because that gives you that hardware security benefit of pin protection over the shard which is stored inside the card.
Yeah, good to know. And second question, I'll keep it short, but like, are you planning to support Cosmos ecosystem anytime soon?
I mean, see, we want to eventually become like an aggregator, so we have to do it. Like, this is not the way for us. And so yeah, Cosmos is something. So we already support Bitcoin forks, EVMs, Solana Near. And then we eventually are going to support Cosmos, Tezos, all of those things are something on the roadmap already.
No, I was just asking because I'm very biased towards the Cosmos ecosystem we build there. We have our own protocol there. So it's always exciting to see new rails. I call it rails to like blockchain, really. That tooling that you're building is pretty useful on that front. So exciting to see that for sure.
Thanks.
Do you support Polkadot?
No, unfortunately. We have been bombarded with different coin support, to be honest.
Okay.
So everything that is in the works right now, Polkadot, Cosmos. I mean, not even just chains, like, the inheritance thing is something people are like, hey, now they have something to compare to, which is Ledger Recover, which they are like so bashed against. But now they get something, with a similar outcome, but without the KYC, without the custodianship and stuff. Which is what the core ethos of like crypto self-custody is, right? So we got great inbound requests for that. And then obviously there are like a lot of UX improvements that we are planning to do, which I was very astonished to find that why other wallets are not looking into this. So things like having a hardware native address book, similar to like contacts book on your phone. So like you don't need to type a phone number every time you're calling someone? Why do you have to
Yeah.
verify the address every time you are sending funds, right? So
Yeah.
we found out a way to do it without compromising security. So the hardware will ensure that your address that you're sending it to, it's maybe Victor's Binance address, right? So you don't need to verify it again and again, and the hardware will ensure that it's the same address that you are sending funds to. So things like that, I think, is going to greatly improve the user experience overall, and that's something also we are heavily working on right now to improve upon.
Okay, where's your firm based?
We are based out of Singapore.
Singapore, okay.
Yeah.
And the hardware manufacturer, where do you do the manufacturing?
We manufacture it in India, so we assemble and do the final manufacturing in India, but we procure the supply chain is like sort of procurement is from different countries. So the secure chips come from NXP Semiconductor and STMicroelectronics, Electronics, which is the main supplier of these cards to the banking industry for debit cards and credit cards. So procure it directly from them. Then there are some non-secure parts like your joystick or cover of your device and stuff, which is not security related. So we procure them from Taiwan. We sort of assemble it all together in India and then ship it out to the final customers before uploading the firmware inside the device.
Thank you. Alum, are you still here?
No, Alum left, but if there isn't any other questions, thank you so much for your time, Rohan. We'd just like to make a quick announcement regarding like next month's meetup. We'd most likely be having it in person. Not sure whether it'll be in Toronto or in Waterloo, because there's ETH Waterloo at the same time, and most likely we might have an event there in person, sponsored by ChainSafe, but we'll only be able to announce like a week prior to the event. So do stay tuned. Meanwhile, in this month, we will be sharing Twitter threads with recaps to all of these projects, including the recordings. So make sure that you like and retweet them to support our creators and our work. So yes, and I think we have a community announcement from Xuan.
Hi, Johnson. Yes, I just hope that I can take this opportunity to share some part of the things that our team is building. It won't take long, probably just 5 minutes or something like that. But I have the initial conversation with Mark. I think our team doing is also really interesting. Oh, I see the. I'm not able to share the screen right now.
Oh, hold on. I will make you do it. Okay. Go ahead.
Thanks everyone. So, yeah. So let me share my screen. So basically, what we are doing is actually we are actually creating a new mechanism that can make make the smart contract upgradable. The way that we are reviewing the DeFi history is the first history is a smart contract 1.0, where the contract is immutable, like Uniswap, like everything, the parameter is fixed. And the 2.0, is like there are some parameters that suit the DAO that can make change of some parameters. SushiSwap, for instance, forked the compound, but it fails. This from the 2.0, there's a voting occurs in off-chain, and a proposal are implemented by this stage. So what we are doing is actually we are actually building a fully on-chain. We are building a fully on-chain smart contract. So the proposal, everything is going to come in from the community, and the proposal is going to also be approved by the community, and then also it's going to be executed by the community. So in this way, so not only that the parameter can be proposed, it can also be changed. For instance, if you propose the change of the reward per block, initially it was like a sushi swap, but something the other protocol is set as a fixed value to be maybe 3, and it remains, the contract is immutable, so it cannot change. So we created such a mechanism that can make the smart contract to change, and that change can also actually solve many other part of the problem that we are talking to solve. For example, that if we go through the code base of the this is the code base of the compound. So we can quickly just go to see some of the code from them and see some really simple problem that they have. So this is the enum state that they're having, and this is they're making count of the proposal. So when they do so for instance, when they do the propose, so they are counting this the proposal count as ID, and then store this into the struct. But the problem is they only have this, so they only have this one ID to counting the whole proposal. But the proposal in each stage, so for example, they can be canceled, they can be queued, also they can be executed. So that means when you finally got it executed, so not all the proposal is the ID is continuous. So when you got executed, the ID is not the continuous, then you sort of keep lots of track of the stuff. And another really major drawback of the compound is they make the implementation so hard. So the people need to write the bytecode to do the execution. We are going to create a new data structure that are going to solve the problem, so that the people don't need to really write the bytecode. It's going to be simple. Like the normal people can actually just based on the proposal, they can do the implementation. So there's not so much time for me to share, but I can briefly just talk about the ideas like in this 5 minutes like this.
Thank you, Sean. All the best with your project. Maybe like if it comes to a demo stage or something, like we would love to have like a more bigger presentation. We would love that. I saw like another community announcement from Mohammed. Would you like to talk about it, or?
I'll just leave it short since we're very much at the end over the event time here. But we actually built out Shade Protocol. We are building private DeFi in the Cosmos ecosystem. We have the largest stablecoin minted on chain, basically called Silk, which is unique in itself because it's pegged to a basket of global currencies similar to SDR. But yeah, that's pretty much what we are building. Give us a follow on Twitter. I would love to talk more in detail. I'll be at Collision, actually. We have a booth set up on Tuesday, Wednesday on Collision. So if you guys are coming to Collision, hop by our booth. Maybe I'll give you guys some stuff which hits off.
Thank you.
Sure. I would like to share for the later on events. currently, we also participate in several hackathons, the Chainlink and the Ethereum. We already just participate at the Ethereum Beijing, and we have the investor who is really interested in our product and idea, and we're going to demonstrate some of our new DeFi ideas in Chainlink hackathon. And I think in June this year is going to be much so somehow we can have some free time to do the share, and yeah.
Thank you. I think we should it's quite after the 9:30. We probably should close our session today. Thank you for everyone stay until the end, and hope you all find the presentation useful. And any last comment from Johnson?
Nothing. I mean, this has been a great session, and thank you everyone for coming. Love the engagement. Love the participation, the questions. We know that we did go slightly a bit over time, but we hope it was worth it. And like there will be recordings later, so in case you weren't able to catch on anything, you could always catch up there. So thank you everyone. Hope you have a great, wonderful month, and hope the crypto market gets better. But yeah, stay strong.
Yes. Thanks everyone. Have a good night, everybody.
Thank you. Good night.
Thank you. Have a good night.